Hi everybody, this is Gary Dean and this is our nightly video report for Tuesday, October 4th, 2016. So we saw some selling today. Still have not been able to break through this panic line, let's call it, or the panic pattern. And that's, you can see that's pretty much the exact low that we hit today, was right at that line right there. And the S&P ran up some, I think it was like 6 points or whatever. When it breaks here, the next line in the sand is really going to be down at this, the 2115 area. That was the previous low. If it breaks that, that's when I'm anticipating that we're going to get that quick move that will come down someplace into this level here. The bearish divergences are really what has me thinking that we're heading lower, as well as I mentioned, each time to just the elections and the uncertainty. So the bulls, they need to defend this. If the bears can push through, we're probably going to get a quick move down to that 2115, most likely even break that. And like I said, I'm still anticipating that we're going to come someplace down here before everything is said and done. On a 60-minute chart, sorry, I was playing around with these things here. So here's the triangle that I've been showing you guys and saying it really just needs to break before we can get a direction. And as you can see, it has broke to the downside. Does it mean that it's going to continue lower? No, because we've seen them break this before and then come back up, and they try to use it as a bear trap. But and overall, the underlying internals of this market just have not been that strong. So there's this triangle broke to the downside. Maybe they come up and back test it up at the 2157, maybe even try to come back in it where we're going to come up to these moving averages as well as the pivots, and that's somewhere up at the 2160. So could be a 10-point run, possibly do a little back test, but I still, I think that the bigger move is going to be to the downside, and you can see we don't have any bullish divergences in place. So, and we're not even completely oversold yet. So there's, the bears have some gas in the tank if they want to take it. But this support area right here, coming from where basically right in between where we went, the 2144 and the 2141. If this breaks, that's when, most likely we're coming back down to this 2113 in a panicked style manner. 15-minute chart, these are the zones I've been showing. We're in the bottom of the first layer of support. If the bears can push through these lows and take through that, then that's when we start expecting the second layer of support to come into play. But right now, you can see the buyers stepped in, at these lows right here, and the primary reason was because it was also at the bottom of this wedge. So like I said, I still believe the bigger point move is going to be to the downside. Maybe they're still going to try to frustrate some people, but anytime they give us a rally, unless they're really, really spiking it up, then you just want to kind of let them run its course. But there's I think the rallies that are there, if you just kind of wait for for certain pivot areas to come into play, then it would be a good place to short and just keep building your position on that. So that's really what I'm not interested on the long side at all right now, just because it's just there's something that's not right with this market right now. They could have been breaking out when they were up here. They didn't. They've had a lot of hard time getting back above previous highs. And, a pivot that we may be able to watch for if we do get a rally, you can see that the bulls have to get it through this 2150 level. From there, there's price resistance as well as the 38% retracement at the 2155 level. And then you can see this 2160 where it's the moving average as well as the 50% retracement. I'd be pretty interested in possibly looking at a long side. Now, we do have bullish divergences on the 15-minute chart, so it's giving us a warning that don't get aggressive on the short side down here. You want to wait for the bounce, and once it gets up to these levels here, you start hitting it on the short side and collect your money and then step back out again. It's really the only way we can work this market at this particular point, because it's just moving up and down so fast that there really is no swing trades that are in play, because it's that they're only lasting a day or two. That's it. So with that, I do, like I said, the bigger point move should come to the downside, being that they broke this triangle. It should pick up steam to the downside, but that's never, a sure thing, but it would make sense if it does happen. And let's see what plays out tomorrow, and have a great night, and I'll talk to you guys in the morning.